Good morning. These are the things that matter most for the U.S. pre-market. Stocks are at fresh records while rates stay high. Iran's sanctions are pushing Treasury yields and oil risk back into the tape. AI infrastructure is becoming more leveraged, and Reddit is entering the S&P 500 with real questions about traffic quality and monetization. The central question for Wall Street is simple. Can record-level equities keep climbing if the hidden cost of capital, energy risk, and AI financing all become harder to ignore at the same time? Start with the record rally problem. MarketWatch reported that rates are at multi-year highs, yet stocks are still hitting fresh records. That is the market's first tension today. High rates normally make future earnings less valuable, but investors are still willing to pay for companies that can show growth, cash flow, and pricing power. The cleaner side is quality growth with visible earnings. Microsoft, Nvidia, and Alphabet. Pressure sits with long-duration growth and profitable AI stories and companies that need cheap financing to make the math work. For private investors, the useful filter is not whether the index is high. It is whether leadership can survive when bonds stop helping the valuation story. Second, the geopolitical channel is active before Wall Street opens. CNBC reported that Treasury yields rose as the U.S. threatened Iran with more economic sanctions. That matters because sanctions risk can move through oil, freight, defense spending, and inflation expectations before it shows up in company earnings. Potential beneficiaries are Exxon, Chevron, and selected defense or energy security names if crude and geopolitical hedging confirm the story. Pressure sits with airlines, transports, and rate-sensitive consumer companies if fuel and yields rise together. The private investor takeaway is to separate a fear headline from a confirmation map. Oil, yields, and transport margins have to agree before the story becomes market-wide. Third, AI is still the market's strongest theme, but the hidden mechanism is changing. CNBC reported that the AI infrastructure boom is becoming more leveraged and harder to track. MarketWatch also reported that Dell stock has beaten Micron and AMD this year, while Salesforce got a boost after JP Morgan said AI fears are overblown. The AI question is no longer only who says artificial intelligence. It is who turns compute, servers, software, and power demand into cash flow without adding fragile debt. The cleaner side is quality growth. Dell and infrastructure software if demand keeps converting into revenue. Pressure sits with companies where AI spending lifts capex faster than margins, or where financing structures become too opaque. For private investors, the useful filter is proof quality, revenue, margins, balance sheet, and customer demand, not just the AI label. Fourth, the underappreciated story is Reddit joining the S&P 500. MarketWatch reported the index move after months of speculation, while analysts still have concerns. This is not just an index membership headline. It is a test of how markets value attention businesses when AI search, recommendation systems, and traffic quality are changing the way users discover content. The cleaner side is Reddit if index demand and advertising progress confirm the story. Pressure sits with social and search platforms if investors start asking whether traffic is durable or being redistributed by AI. The private investor takeaway is not to copy an index event. It is to watch whether attention can become reliable revenue. Here is the stock-led watch list. In record rally quality, watch Microsoft, Nvidia, and Alphabet. In energy and sanction risk, watch Exxon, Chevron, and United Airlines. In AI infrastructure proof, watch Nvidia, Dell, and Salesforce. In attention and index demand, watch Reddit, Alphabet, and Meta. Market bias, constructive, but more fragile than the headline index level suggests. The bullish version is that quality megacaps keep earnings power, AI infrastructure converts into revenue, and oil plus yields stay contained enough for risk appetite to hold. The mistake to avoid is treating records as confirmation by themselves. Today's better filter is cross-market proof. Yields, oil, AI balance sheets, and whether newly favored names such as Reddit can hold attention after the index announcement. That is the U.S. pre-market brief for Friday, August 14th. I will be back with the next brief before the next open. Research context only. This briefing is not investment advice, not a trading recommendation, and not personal financial guidance. No targets, stops, sizing, or portfolio instructions are provided.